Banks that fail to comply with the Central Bank of Kenya lending guidelines now risk penalties of up to 3 times their profits. This comes as CBK moves to accelerate the reduction of lending rates following its continued monetary easing measures. In its first Monetary Policy Committee meeting of the year, CBK lowered the central bank rate to 10.75% from 11.25%, a 50 basis point reduction aimed at encouraging banks to reduce borrowing costs.
To ensure compliance, CBK has launched on-site inspection of banks, checking if they are implementing the risk-based credit pricing model. CBK Governor Kamau Thuge confirmed that 5 banks are currently under review, with the findings expected in 2 weeks. Institutions found to be flouting CBK directive will face strict penalties.
If we just follow the risk-based credit pricing model, there is no reason why the lending rates to the private sector should not come down. And there's a provision now to charge the banks by to the penalty to be 3 times how much the individual banks have benefited by.
Thuge expressed optimism that the reduction in both the CBR rate and the cash reserve ratio (CRR) will increase liquidity in the banking sector, making more funds available for lending. He further noted that lowering the CBR rate should reduce deposit costs for banks, enabling them to offer cheaper loans.
I think once that happens, we should be able to see more demand, either for consumer durables, but also for investments. And that increase in aggregate demand is what we are expecting would also stimulate economic growth. And for that reason, we have increased the growth from 4.6% in 2024 to 5.4%.
Additionally, CBK has written to over 10 banks, requiring them to increase their core capital to over 3 billion shillings. Despite these regulatory moves, Kenyan banks remain well capitalized, with cumulative pre-tax profit rising by 36 billion shillings to 262.3 billion shillings in December 2024, compared to 226.3 billion shillings in December 2023.
So we will be engaging the banks once we get the responses from the banks to see exactly how they are going to meet the capital requirements for this year, as well as over the medium term, over the next 5 years.
According to the central bank governor Kamau Thuge, a freeze in aid from the U.S. market may not have a significant impact on the country's exchange rate. However, the governor worries that a reduction in diaspora remittance and a change in global oil prices may have a significant impact on the country's exchange rate. Jimmy Mbogo, Citizen TV, Nairobi.